course, your daily financial news. This is a live show we do 7 days a week, usually about 7:30. If you're new to the channel, welcome. We produce original content, several pieces every day, with the sheer goal of making you just a little bit better than yesterday. We focus on the consumer, cost of capital a lot. So the last week has been interesting, and next week will certainly be as interesting. If you've been watching the channel for a while, you will know that yesterday was a long tax day for me, actually in the chair with my CPA for about 13 hours. Yes, that's a long time. I kind of feel like I'm going to take my report card to my mom or dad, really my mom, and say, here's how I did last year. And lo and behold, I'm going to owe some money to the IRS, to the Fed. I'll get a little bit back from the state, given I've kind of prepaid with when I sell properties. So yeah, it looks like I'm going to owe some money this year. Really, what I take from that is I need more real estate. Over the years, if you've been watching the channel, you know that we sold off some apartment buildings in 2019. We thought the cap rates were compressed, hence values were high. Really glad we got rid of those assets because I suspect they are performing below expectations in this environment. But it looks like we need some more depreciation, need to do some more holds. So again, yeah, that's kind of the lesson from last year is I need more real estate, which I thought was interesting. But yes, no problem paying my legal amount of taxes. Made a profit, got to pay some. So that is where we're at. When we look at the day, if you're one of my students, I really want to highlight Bill Allen's video on private money. That's about a 30-minute presentation really on mindset. And I've watched it a few times now myself, and it really helps me. As you know, I've successfully raised private money 2 times in my 20-year career. Once in 2010 by just willingly paying 10%, and another time here recently, with my 6 and 20 program, which again, the note that I spent thousands of dollars on is a sample in the course as well. But listening to Bill Allen talk about private money is like, it's like almost going to I don't know if a preacher is the right word, but just somebody to go kind of just make your mind right, and really helped me understand that, I could really tackle raising private money in different ways. So if you haven't watched Bill Allen's presentation yet, give it a shot. It's free to you. It's in the course, section 5, private money. And I am looking to add more experts. Anna Kelly, who we talked to on Wednesday, has agreed. Jonathan Twomley on Thursday has agreed. So more stuff coming. But on to the daily financial news. It is Saturday, and usually Saturday is more about the week ahead, but if you don't know, Warren Buffett released his yearly letter kind of to the world. Warren Buffett's letters over the last several decades have become, I don't know, wanted theater. People look forward to these, always these nice advice. And again, kind of Warren Buffett's thoughts of today, again, I think need to be heard. First, it's kind of never bet against America. Right, he goes on to say that the coasts, the West and East Coasts get a lot of press. However, miracles occur in Middle America all the time. He talks about there's been no better place to incubate value and unleash the human potential. Just lots of, if you want to feel good, read his letter. It's 14 pages. I'd say half of it is kind of financials. The other half is kind of, really his thoughts on this. Since our country's birth, the individual with an idea, ambition, and often a pittance of capital has succeeded beyond their wildest dreams. Just positive. Warren Buffett did end the year with $145 billion in cash. Cash is a problem. He can't find the returns. To that end, Warren Buffett bought back $25 billion in his stock, $9 billion just in Q4. Typically, if you've been watching Warren Buffett for a while, he's not he doesn't like to do that. He doesn't like to buy back his own stock because he doesn't see it as a good use of capital. But when there is nothing out there, he is okay with doing that. And essentially, he has reduced the float So if you are an owner, your ownership rate has increased by about 5%. That is his math. I didn't bother doing the math, but that's what he says. So pretty cool. Another thing that happened late yesterday is the House passed the $1.9 trillion bill. This is coming, folks, whether we like it or not. As we saw some of the action last week, this money may land at an interesting time, right? It'll be interesting. Friday is going to be a big day. We'll get to that in a minute. So Friday is going to be a big day. We'll talk about that in just a minute. The 10-year note was a problem this week, and as I talked way back on January 1st, that would be the number to watch. What is going on with the 10-year Treasury? The Fed can successfully control the front end, but they do not have the power to control the back end. The bond market, the 10, 30 years, several $100 trillion. The Fed can't play. They're not in that market. But it spiked to 1.6. I think that was Wednesday. It then settled back to 1.45. All these numbers aren't relevant, but the rate of change is relevant. The rate of change, that's what we're going to have to watch. I had thought we would get to 1.5 by the end of March. Shoot, we saw it Wednesday. So pretty interesting. So let's get to the week ahead, and we'll close on Friday. Friday could get noisy, but let's go through the week. Monday, again, we are in earnings season, so we have Zoom video. Is Zoom video just going to have another blowout quarter, or are we going to get hints of Zoom fatigue, right? Is Zoom going to come out and say, you know what, our forward-looking guidance, we're going to have tough compares? Remember, Zoom started taking off this time last year. Honestly, I think they're going to have one more good quarter. The tough compares won't start till next quarter, but we will see. They are eventually going to have to talk about that. Another one I'm looking at on Monday is going to be Hilton Grand Vacations. Again, I think this could be a kitchen sink quarter. I think this is the time to kind of take all of the charges because I think it gets better for vacation and travel going forward. Companies like this were nothing the last year. I think they're going to be everything in the year ahead. So I'll be watching that because, again, we travel and we watch the consumer on this show. Is the consumer nervous, hence saving trillions of dollars, or are they spending and spending and spending? Tuesday's a big day because we have retailers Target and Nordstrom's. What's going on there? Target is kind of killing it with online sales and store pickup. Nordstrom's has been struggling. Nordstrom's will be interesting to see if the luxury buyer is coming back or if they have plans for that going forward. Wednesday, Dollar Tree is going to be interesting, right? Or did they see an uptick in January with the stimulus that came out? It'll be interesting to see there. They will certainly be calling for stimulus ahead. I expect them to. You also have Snowflake. Snowflake is one of those hot tech stocks. We have seen some tech companies come out and warn about they've kind of had weaker than expected growth. Think Salesforce.com just the other day. There have been others in the last 10 days. Is Snowflake going to talk about the industrial or the company's enterprise customers going, hey, a little bit slow on the buy? Thursday is always a big day. We, of course, have weekly claims, right? Do we break above the 800 or below the 700? We've been stuck in this very painful range. What is going on there? We also have Costco, right? Did they see an uptick because of the stimulus or not? We also have Gap retail coming out. And then Friday. I think Friday is going to be the big day. Friday is non-farm payroll for February. Yes, folks, we are going to be in March on Monday. So on Friday, we're going to get the jobs report on February. And this could send the bond market all kinds of different ways. So the expectation for Friday is 218,000 jobs. And here's the deal. If it comes in light, call it 100,000 jobs created, the bond market will settle back because they'll go, okay, cool, Powell's right, we're not going. But man, jobs come in at just 250, so a slight beat. The bond market could get cranky and really say that the Fed has lost it. They're not in control. Inflation is real. The economy is stronger. Oh, by the way, we got 1.9 trillion coming. We got an infrastructure bill behind it coming. So it could get interesting. So Friday's the big day. Friday morning. I think just before the stock market opens. I'm going to be tuning in for that. So lots of stuff going on. We will, of course, be talking to our experts Monday through Friday. It's going to be a fun week. I hope you have a great day. Saturday, have fun. If you're in real estate, do your work, understand your numbers, see what's going on. I just wish you well. Have fun. If you have some pets at home, hug them, kiss them. We miss Jimbo all the time. Thank you. Bye.